Thanks for joining us tonight. You're watching Squawk. I'm Bruce Whitfield on CNBC Africa, first in business worldwide. In the next 30 minutes, we'll dig into the latest financial news and market stories. And joining me at the hot desk, David Shapiro from Sasfin and Mohammed Nala from Nedbank Capital. Good to see you both. Mohammed, we have to focus on David. He needs the attention because for the first time in a long and illustrious career, your investment genius has paid off.
I was going to say to you, I can't exactly call it an overnight success. You know? Been battling and battling and battling. Finally got the combination right. You know.
Was this a measure of investment skill, or was it one of those lifetime achievement awards?
There was actually a lot of skill, you know? and I have to say, I think the one thing that really comes out, Bruce, is that, and you know, I'm a great Buffett fan. I love his sayings, etc. And as he says, you don't have to be a genius to pick stocks. You know, you only need an IQ of about 120 or thereabouts. So,
so you did well there, because with an IQ of 95, you've done
that's what I'm saying.
well.
You know, this one looks good. This one looks okay.
But yeah, you won the best value fund, the best performance in a value fund. You then also won the overall equity fund as well. Yeah. So you went up against all of the equity fund managers, whether it been small caps, large caps, sector specific.
And I didn't do it like Lance Armstrong. You know, that was great.
I don't know if enthusiasm should be classed as a drug.
But look, it's to be honest, Bruce, and I think that jokes aside, I think, you know, whatever we discuss here, what we've been discussing over the last couple of years on various programs, you just have to put that into practice. And I think where it made a big difference is that I felt bullish about markets over the last few. I just felt, when I say value, that you know, I looked at companies, I didn't look at the economies, and I just focused on literally good companies.
But that's the trick, perhaps, and it is. It's focusing on the fundamentals of companies, understanding what the companies do, understanding how they make their money, and whether they're likely to continue making that money into the future.
Well, that's the trick now. You know, everybody looks at you, and I'm saying, I'm not changing the formula. It's going to be a difficult market to repeat what I have over the last 3 years, but I'm sticking to the same companies. Simply, they're good companies. Good dividend yields, producing good profits. You know, whether the market rewards them the same in this kind of climate is going to be difficult.
You run the risk now, and it's a risk that all fund managers face, and that is you become top of any particular league table, and suddenly you become a financial advisor's favorite, and they start putting their clients into it because you're an easy sell, because here's David Shapiro, the guy on TV who's won the Raging Bull Award. That adds risk to your investment strategy, because suddenly, if you get a big inflow of capital, you've got to apply that, and that could mess up your strategy.
It can mess it up, because I like to only choose 20 to 25 stocks in my portfolio. So I go for 25 times 4%, thereabouts, or you know, around about that. Now the trouble is, and I also go for large caps, so I haven't gone into small caps. The problem is that if more and more money does come, how do you keep that discipline? You know, and that's difficult. And you don't want to go and now seek performance, because that's your downfall. So, you know, that's the challenge, just to remain with the winning pack.
He thought he had a tough year in 2012, did David Shapiro from Sasfin, but congratulations to him with 2 Raging Bull Awards for performance. We're very pleased for him. Let's, Mohammed Nala's here as well. Sorry, we were just having such a nice chat.
I wanted to dust his crystal ball off and see what it's going to tell us for markets going forward, because that's the challenge, David.
It does, it's so completely. But I want to talk about something completely different. And here's a man called Patrice Motsepe, who's made an extraordinary amount of money in a very short period of time. 1993, he's a lawyer at Bowman Gilfillan. He's done his studies. He's studied in Swaziland. He goes to the United States. He's in and out. He then decides the law is for people who don't want to make real money, and he goes and becomes a mining contractor, and he does a couple of deals, and over a period of time, Bob's your auntie, 25 billion rands worth of assets ascribed, according to Forbes magazine, to Patrice Motsepe. Is he giving back because of a guilty conscience, do you think?
I think that's a tough question. Not a guilty conscience, rather than a social imperative.
Yeah.
Given the flavor of what you're seeing being discussed right now, you know, the huge inequality, South Africa number 1 or number 2 in terms of that Gini coefficient, that kind of social pressure is really starting to hit the wealthier people in the country quite hard. So I think, you know, it's a step in the right direction. It's saying, let's do something positive, let's give something back to the community. And perhaps that came out after that discussion sitting next to the president, where most people paid big money for those tickets.
Absolutely. I suspect this has been in the works for some time. But it's taking your hero, your investment hero, Warren Buffett and Bill Gates, their example, and they're going around the world signing up billionaires to give away a proportion of their wealth. And what I love the way Patrice Motsepe has structured this is that he's done it on a sustainable basis, giving away half the returns on an annual basis. This thing can run in perpetuity.
Bruce, how much is enough?
Yeah.
You know, I think it comes down to that. How much do I really need to live, you know, and how much is excess? And I think that's where Buffett came. Buffett gave away 85% of his wealth, or almost 90%.
Slightly wealthier than Patrice.
Yeah, he's in the $45 to $50 billion.
Yeah.
But still, it comes down to you can only eat 3 times a day, you can wear 1 pair of shoes. What I like about Buffett's philosophy is he does not believe that the offspring, in other words, his children should rule society simply because what he calls the luck of the womb.
Yeah.
You know, I was born to wealthy parents, therefore I can walk around society doing nothing and getting everybody to bow down to me. And I think that's the danger. And hopefully, I'm sure Patrice's children are still going to eat well and do well. But I think that's one of the issues. And what he's doing with this money, he's now giving other people an opportunity to do what he did.
What is the biggest philanthropic trust in the country that we know about, Mohammed?
Sure, in the country.
Yeah.
No idea.
Okay, that's an interesting
I
one.
would say from the Oppenheimers, from the Rhodes Scholarship.
No,
Is it?
again, Rhodes has been going for over 100 years, and
Yeah.
the money's been managed very carefully. But the one that we know about, I was talking to Sheila Gastra from Inyaletu yesterday, and she was saying the one that we know about, the most public one, is worth about R1 billion. That's what the assets are within this particular single. I mean, the Oppenheimers have got lots of trusts and lots of things all over the place, but the biggest single trust that she is aware of is the D.G. Murray Trust. Who's D.G. Murray? It's the family that started Murray and Roberts. Absolutely. And then it occurred to me, when Murray and Roberts hit its problems a while back and needed to go to shareholders for cash, they should have gone to the D.G. Murray Trust and said, can we have a handout, please? We need some of the family money back in the coffers. But there we go, a little bit of trivia. On to markets, and let's look at all the big news of the week. Again, Anglo-American, that's the big story, no doubt, from a corporate perspective, Mohammed. Here we've got Anglo-American, a $4 billion write-down on Minas Rio. It was smaller than the market had expected. Have they underestimated what they need to do?
I think if you look at that Minas Rio, it's been the cloud on Anglo's horizon for quite some time. It's been seen as the black hole sucking the cash out of the group. And I think the fact that write-down, smaller than market's expectations, may be a bullish thing. The rhetoric coming out of the company saying that, you know, we're going to turn, we're going to get a bit of rebound come through in terms of those South American assets. It's still a bit early to tell. So if you look at what's happening globally to commodities, we've seen a bit of a rebound come through there, premised on expectations for global growth. But then yesterday we had US GDP numbers come out, and that's showing you just how tricky that global growth picture really looks. So I think early to tell whether we've seen a turn in that commodities market and whether you could actually push that through from a macro factor down to Anglo-American.
And an added level of risk when it comes to Anglo-American is what's happening with Anglo-Platinum and the political risk that comes into Anglo-Platinum, David, when it's basically been bullied out of taking a commercial decision into more of a social decision, which is good and all well and good for South Africa,
I
PTY
thought about
Limited,
that a lot.
but good for Anglos?
I thought about that whole thing, really. And you know what you come out with? Governments are regional, corporates are international. In other words, governments have got a regional constituency, corporates have got an international constituency. You can't do that to corporates anymore. You can't dictate this is what you'll do. And that's what's happening to Anglo-Plat, and that worries me. So what are the shareholders doing in London? They're saying, listen, if you're going to continue like this, we're going to put more and more pressure on you, Mr. Kutafani, to abandon your South African assets. And I think governments have now got to understand they've actually lost control over corporates. Just from a write-off point of view, where Anglo went wrong, where Cynthia Carroll went wrong, there was pressure on her to expand her assets internationally, and they went and they bought these things far, far too expensive, as did the Rios with Riversdale in the Tet province in Mozambique now, which they've written off. And I think you're going to find more and more write-offs. We saw it with BHP Billiton.
Yes.
You know, going for deals. We've got to get the potash deal. We've got to get this in order to expand. And at the end of the day, it's ending up costing shareholders not millions of dollars, but billions.
And ultimately, when logic flies out of the window in times of boom, bust cannot be far behind. And we're going through a period, not of bust, but certainly of repair. We're going through repairs and maintenance process. As Anglo's at $270 on an historical multiple of about 10 times. Surely it's got to be the greatest sitting duck in the South African market at the moment.
Yeah, there's been a lot of appetite around Anglo, interest around Anglo, because first of all, it's potentially a takeover target. You know, you've got the much bigger the much bigger players coming in there, and maybe Anglo's as a smaller player looks as though it might be ripe for the taking. I think with a new CEO though, there's some interesting prospects there. Whether he manages to turn that company around would certainly dictate whether there's substantial upside. But I think more on a sectoral basis, you're already seeing that value, the value players, I mean, David will comment about this, starting to dig around in that resource space. They're rotating out of that very expensive retail sector, and you're starting to see that gain a little bit of traction. So I think on the back of that, the earnings multiples in that resource sector not looking too expensive. My preference has always been for your more diversified global resource companies there, specifically because of the local risk attached to a company like Anglo. So that's keeping me cautious on the side. And depending on whether they decide to hive off those local assets, and if that discount dissipates, would dictate whether there's much more upside to come through in terms of Anglos.
David, you run a value fund. Does Anglo make it into the value fund?
No.
So that's interesting. I mean, here you got your raging bull winning portfolio, and Anglo's is not in it.
You know what I do? That particular fund I run, I focus only on South African growth, and on, when I say growth, South African kind of value, which I define differently from the good old Buffett of it. I look for sustainable profits and very high dividend yields on that. And I also look for companies that are growing into Africa. So that's, Anglo's doesn't fit that. It's too diversified. So I've got Exxaro and I've got Kumba in and I've got Sasol in. Would I buy Anglo's at the moment? I'm worried about it. I'd far rather go Rio's and Rio Tinto Offshore or BHP Billiton. I'm much more comfortable because I don't know the pressure on Anglo's.
We've been talking for a long time about the madness in the retail sector, and the vulnerability of the retail sector has been exhibited twice this month when there's been a little bit of a shock, a little bit of a surprise, a bit of a capital outflow, and suddenly we get 5-6% smacks on retail shares. Yesterday we saw two trading updates, one from Astral, one from Cashbuild. These are in the economy class section of the aeroplane, the South African aeroplane, and they warn us that retail sector is vulnerable to a drop-off in spending and a drop-off in borrowing.
I think if you look at those, they scared me. They really scared me.
And Cashbuild is flat, and Astral...
And these are great companies. Yeah. These are companies that we've been talking about, good value and worth going into. Look at Cashbuild. It's supplying the social grants down in the Eastern Cape. People are using the social grants, buying cement, putting on rooms. Not happening. Not happening. And then the Astral was a bigger story in that. It just shows you the margin squeeze. Yes, they're right, we can talk about that. But at the end of the day, it just shows you the cost pressures coming through on the input costs, etc. And I'm worried about it. I'm worried where this will take Tigers, where it will take other food producers. I'm trying to work the see-through on companies that, producers. Take together what's happening down in the Western Cape as well, the riots, costing, wage pressures there and so on.
This economy class section of the aeroplane, Mohammed, what's your reading on it?
Yeah, again, so I think it's giving us a nice snapshot in terms of what's happening in the real economy, at the coalface. And that's the worrying thing is when you look at it from a macro perspective, you're starting to see stuff like your PMI indicators still trending lower. That's a very reliable indicator in terms of what's going to happen with manufacturing in South Africa. That filters through to GDP. And I mean, the Reserve Bank governor spoke last week saying that the upside risks to inflation, the downside risks to growth. That's got to filter through to the real economy. And I think a really tough time. We're certainly not out of the woods just yet. And you're starting to see that filter through in terms of earnings that are coming through from the companies.
Globally, Bruce, put this in perspective because people are having difficulty with the JSE understanding it. Globally, markets are on the march. Forget about the US GDP number. I think there was the defense element of it which brought it down, but I think it will recover.
It's an awkward thing about not fighting wars as aggressively.
Your
defense companies don't do so well.
There was a huge fall, like a 22% drop in defense spending, which distorted the numbers. Take that aside. We're marching up. Confidence is coming back in. People are starting to spend. You're seeing in the United States. So we're seeing global markets pick up as well. We're seeing the resource side of our market pick up. But our local side, which had a very good year, is looking more and more vulnerable. So you've got this lopsided issue in our market. Resources doing well, but our economic stocks are not doing, our local economic stocks are not doing.
And even the likes of Cashbuild and African Bank are beginning to talk about the end of the boom in growth in subprime lending. What's it called?
Unsecured lending.
Thank you. Unsecured. I'm too American in my thinking right now. Unsecured lending. Here even they are beginning to talk it down. And that's been a key driver for the likes of Astral. If you want chicken and you've got a short-term loan, you can buy some chicken, or you can go and buy some building materials from Cashbuild. If it's slowing down in the unsecured lending space, the rest of the South African economy is going to take a bit of a knock.
I think you've got to take that through. You've got to take it. So where you're buying shares, you've got to be very, very selective. The apparel retailers look a little more comfortable than maybe the other retailers.
Even food retailers might have been taking a knock. I mean, ShopRite and Woolies and Spar have been nailed quite hard.
Yeah, I mean, they're usually your defensive stocks. That's the kind of stuff you're buying. And potentially why you're seeing that rotation is that, like David said, globally you're seeing a bit of a change, a bit more optimism around growth. And so that would dictate almost a rotation out of your more defensive stocks into your cyclical stocks, into your resource counter. So you're potentially seeing that coming through. But those stocks have gotten extended for quite some time. They've looked expensive throughout all of last year. And it's maybe just playing catch up to the reality.
So even though we're seeing this rotation, we're not going to see it into Anglos. That's the concern. Okay, anyway, lots of contradictions, as there always are when we talk about stock markets, we talk about companies. It's always quite tough and quite confusing, but that's why we repeat the show of the weekend.